Welcome to El Oraculo Cifrado, the channel where we decode the secrets of money and cryptocurrency so you can take control of your financial future. Today we're diving deep into. Imagine this: you wake up on a Monday morning, grab your phone, and see that while you were sleeping, your money grew. Without doing a single thing. No calls, no meetings, no stress. That's not a dream, that's what millions of people are doing. In school they taught you math, history, and geography. But nobody, absolutely nobody, ever explained how to make your money grow. That wasn't an accident, it was by design. And today, in this video, we're going to break through that barrier once and for all. By the end you'll understand what ETFs are, how they work, which ones are the best, and how to get started with just a few dollars. ETF stands for Exchange Traded Fund. Think of it this way: imagine you want to buy fruit, but instead of buying just one apple, you buy a basket that has apples, oranges, grapes, and strawberries, all together, all diversified. An ETF is exactly that, but with company stocks. With a single product, you can have exposure to dozens, hundreds, or even thousands of companies all at the same time. When you buy an individual stock, you're betting everything on one single company. If Apple drops 40%, your money drops 40%. But when you buy an ETF that includes Apple alongside 499 other companies, if Apple falls, the impact on your portfolio is minimal. It's the difference between putting all your eggs in one basket, or spreading them across 100 different baskets. Diversification isn't optional, it's the #1 rule of smart investing. Warren Buffett, one of the wealthiest men on the planet, has publicly stated that most everyday investors should simply buy an S&P 500 index ETF and forget about it. A man who built his fortune picking individual stocks recommends ETFs for the average. Before we continue, I need you to absorb something that very few people truly understand. The US stock market has historically gone up an average of 10% per year. That means if you invest $10,000 today in an S&P 500 ETF and don't touch it, in 30 years you'd have approximately $174,000. Without doing anything. Just the power of compound interest working for you. Are you starting to see why this matters so much? Number 1, SPY or VOO, which track the S&P 500 index with the 500 largest US companies. Number 2, KuCoin, which follows the 100 biggest tech companies on the Nasdaq. Number 3, VTI, giving you exposure to the entire US market. Number 4, VT, the complete global market in a single ETF. And number 5, the one changing everything in 2024, spot Bitcoin ETFs. In January 2024, something historic happened that changed the investment world forever. The US SEC approved the first spot Bitcoin ETFs. This means you can now get exposure to Bitcoin through a regular brokerage account, no wallets, no private keys, no fear of losing your money to a technical mistake. BlackRock, the world's largest investment fund, launched its own Bitcoin ETF called IBIT, and within just months it accumulated billions of dollars. This is the question every beginner asks, and the answer is going to surprise you. With modern platforms like Fidelity, Schwab, or even apps like Robinhood, you can start investing in ETFs with as little as $1. Yes, you heard that right, $1. Thanks to fractional shares, you no longer need thousands of dollars to access the same instruments used by major investment funds. The democratization of money is here. Now, an important pause, because if I didn't tell you this, I wouldn't be being honest with you. ETFs are not perfect. There are real risks you need to know. First, market risk: if the market drops, your ETF drops with it. Second, leveraged ETFs that promise double or triple the gains also carry double or triple the losses, making them extremely dangerous for beginners. Third, ETFs with high fees can silently eat away at your gains over time. Knowing the risks doesn't pay. This video is possible thanks to KuCoin. Miles to altcoins disponibles. Link in description. Pay close attention here, because this is where most beginners lose money without even realizing it. ETFs have an annual cost called the expense ratio. It seems small, but the difference is enormous over the long run. A 0.03% annual fee ETF like Vanguard's VOO versus an actively managed fund charging 1% per year, over 30 years on a $10,000 investment, that difference represents more than $50,000 in lost gains. Those decimals matter enormously. Here's a fun fact that's going to blow your mind. The world's first ETF was created in 1993 in the United States. It was called the SPDR S&P 500, known as SPY, and today it's the most traded ETF on the planet with over $400 billion in assets. In just 3 decades, ETFs went from being a financial experiment to becoming the heart of the global investment industry. Today there are more than 8,000 different ETFs in the world. The revolution already happened. Are you going to be left out? Many people confuse ETFs with mutual funds, but there are crucial differences. First, ETFs trade in real time throughout the day like a stock, mutual funds only once a day. Second, ETFs generally have much lower fees. Third, ETFs are more transparent, you always know exactly what you own. Fourth, actively managed mutual funds rarely beat the market over the long term. In 90% of cases, the passive ETF wins. Hold on. I need to tell you about the most powerful and simple strategy for investing in ETFs. It's called dollar cost averaging. The idea is brutally simple. You invest the same amount of money every month, regardless of whether the market is high or low. When it drops, you buy cheaper. When it rises, your previous investments are worth more. Over time, your average investment price optimizes itself, and you completely eliminate the stress of trying to guess the perfect moment to enter the market. Alright, it's time for concrete action. Step 1. Open an account with a reputable broker. The best options for Spanish speakers are interactive brokers, Fidelity, or if you're in Latin America, platforms like Itaú, XP Investments, or GBM in Mexico. Step 2. Deposit the amount you can afford to invest, and remember never to invest money you might need in the short term. Step 3. Search for the ETF ticker you want, like VOO or SPY. Step 4. Buy it and activate automatic monthly contributions. It really is that simple. Listen to this carefully because it's the most important lesson in this entire video. The greatest asset you have for investing is not money, it's time. If you start investing $200 a month in an S&P 500 ETF at age 25, by age 65 you'd have approximately $1.2 million. If you wait until 35 to do the exact same thing, you'd arrive at 65 with only $600,000. A difference of $600,000 just from waiting 10. After everything you've learned, I want to save you from the costliest mistakes beginners make. Mistake 1. Panic selling when the market drops, because historically the market has always recovered. Mistake 2. Trying to time the market, which even professionals can't do consistently. Mistake 3. Investing money you'll need in the short term. Mistake 4. Failing to diversify geographically. Mistake 5. Ignoring taxes on capital gains. Knowing these mistakes before, now I'm going to reveal something that the most sophisticated investors are already doing, combining traditional ETFs with Bitcoin ETFs to create a truly powerful 21st century portfolio. The most popular strategy involves keeping 90% of your portfolio in S&P 500 ETFs for proven stability and growth, and 10% in Bitcoin ETFs for exposure to the most disruptive asset of our generation. This gives you the best of both worlds, security and the potential for exponential growth. We've reached the end, and I want you to leave this video with one thing absolutely crystal clear. ETFs are the most powerful, accessible, and proven tool that exists for building long-term wealth. It doesn't matter if you're 18 or 50, whether you have $10 or $10,000, you can start today. Now I need something from you. If this video opened your eyes, hit like right now, subscribe to the channel so you don't miss the next video where we dive into the world of crypto, and share this with someone who needs to hear it. Subscribe to the channel and ring the bell to never miss a video. Every week we publish information that can change your financial future.